Welcome to Analyze Your Trade for September 12th, 2017. This is episode number 3. My name is David Kosmeter, and I am the creator of Timing Research. Tonight we will be discussing your trade ideas, and I developed this show with Dean Jenkins of FollowMeTrades.com, but he is off this week as moderators, and I have Dave Landry here to moderate. So I'm going to go ahead and turn it over to him.
Okay, thank you, Dave Kosmeter, and thank you guys for having me back for Analyze Your Trade. Let's go over to you, Anka, first. Anka Metcalf of TradeOutLoud.com. Tell us a little bit about yourself, and if you have a chart you want to share to tell us a little bit about your methodology, a recent trade, or something like that, feel free to put that up for us.
Is that hi, everybody. Is the slide just going wild?
No, that's you going wild.
Okay,
Girls going wild.
My slide is just going wild all over the place. I don't know why.
Well, it's exciting.
So thank you so much, David, and thank you everyone for having me on the show tonight. It is great to be alongside many great traders tonight. And let me share with you a little bit about myself. So my name is Anka Metcalf, and I'm a professional independent trader that is focused on equities, futures, and Forex. For the last 14 years, I've been doing this professionally. Prior to becoming a professional independent trader, I have 10 plus years in investment banking in Europe. I'm also the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in the equities, futures, and Forex markets. I'm also the designer of an institutional proprietary trading system that is based on price support and resistance, specific trigger times, specific price zones, chart correlation, a strict set of trading rules, and a 10-point scoring system that enables myself and my traders to identify trades with ease and more clarity.
Because about to put me into an epileptic seizure here.
Sorry about that, guys. Okay, I'll just put this slide down. Okay, here we go.
There you go. It's stopped now.
Okay. Oh my goodness. All right. So, all right. Cool. I have everything out.
All right. You have a chart you want to throw up real quick and show us a little bit about your methodology or something, or?
Sure, absolutely. I'm just trying to switch to to my other screen. Sorry about that, guys.
That's okay.
Okay, so I hope I didn't put anyone to sleep right now.
I think we had. We toasted a little bit too much before we got started, so.
Okay, so here's a trade that I'm currently in. I have been in this trade for a very long time, and as long as the market, the financial market, has remained pretty sideways, there were multiple entry opportunities, and I did mention the fact that I do trade based on support and resistance, and this is the perfect example for this trade, for trying to capture this trade right at support. So the first time it has set support here. So let me explain a little bit about this chart. So I'm going to zoom in on this chart a little bit so you guys can actually see a much larger chart so you can see the trend. So obviously it is uptrending, right? So we have a succession of higher highs and higher lows. And from this point, from the gap up, it rallied into very close to the $69 area. And then it pulled back and it filled the gap. And it was very interesting to see that the gap fill in C, which is city, gapped out. It actually filled the gap, and this pivot fell into this minor support area, formed support for current price action, and this support has held really steadily since July 14th, so for a very long time. So at this point, I was not very interested in this trade, but as time progressed, I had another gap up here. I was getting ready to see the price action and the activity through the summer. I am not a very active trader, especially a swing trader, for the month of August, and I was looking at this fake out, and then the movement back down to support level, and this is actually where I initiated the trade. I initiated the trade at $66, and I had a very small risk for a swing trade. My stop was actually $65, although the stop is $65.50. I had a little wiggle room of about 50 cents for the stop, and I didn't really want to get stopped out in case we get one of these algo flurries to the downside. So I didn't want them to outsmart me. So the trade resumed its trajectory higher. I sold a portion of the trade actually at $68, and I waited for another pullback and an opportunity to leg in. I got it again at $66, back at support right here. And I actually got out at 68 once again. So you could see it's running 68.80. I don't read tops and bottoms, but when I have multiple repetition of these scenarios, I like to buy at the bottom and throw out into this resistance area. So this is how I play with support resistance. Obviously, being a bank stock, I am waiting for next week's FOMC meeting, and that's going to be the catalyst. And we're going to see if we're going to get a rate hike, maybe a double rate hike, and maybe the Fed is not going to go for a quarter a point, and maybe the Fed is going to go for half a point. So depending on how the Fed is going to and how the market is going to react based on what the Fed has to say next week, if we might get a rate hike, I am almost certain that we're going to get a spike in financials once again, and it might take this stock higher. And we can look at this as a possible breakout at this point over $69 and support at 66. So even if we get a flurry to the upside, let's say into next week's trading, I'll wait for maybe a more shallow pullback back into the $68, which is this median line that is right here. And that would offer me a secondary entry opportunity to capture the breakout that is on a much larger time frame. So all in all, I think that when we look on the, and by the way, guys, this was the daily chart. And if you look very closely on the weekly chart, we do have this Christmas sort of light effect right here of red, green, which is a good indication of a range and a possible breakout. Obviously, if the $65.40 is going to be violated, we might see a steeper pullback, most possibly into the $63 area, if not into the 60, and possibly the trend will resume again because we are in a very, very strong trend. And I have been liking this stock a lot, and I have been trading it throughout this year. So I really like what it's doing and the way it is behaving right now. So this is pretty much it for this trade. As in terms of indicators, I just use volume. This red line is the 200 simple moving average, 50 period moving average, and 20 simple moving average as well. And I use the 89 moving average for the weekly charts and the monthly charts.
Okay, cool. Okay, let's go to you next, Mike Pisani of Alpha Shark. I got in trouble with some Alpha Shark guys in Vegas. They're kind of fun to hang out with. I guess what happens is Vegas stays in Vegas, but it did involve machine guns. But it was we didn't get in trouble. We just had good times. But anyway, Mike, for those of us who don't know Alpha Shark and you, can you tell us a little bit about yourself, your trading, and a little bit about Alpha Shark. And if you want to throw up a recent trade, that doesn't sound right, does it? If you want to post or share a recent trade, feel free to do that.
Thanks, Dave. Yeah, I'm a Jersey boy, so yeah, we definitely walk around with Tommy guns like the old days over here. So we go down to Vegas, we'll have some fun. My name is Mike Pisani. I am with Alpha Shark. I've been with them for about 3 months. I've been trading since 2008, just after the financial crash. Basically saw the, kind of get into the markets when everything was real weak and really started trading financials. And then eventually I saw options and I said, wow, leverage, what a great concept, how to make real money. And so I got myself involved in using options about 6 years ago. And since then, I've been hooked and been doing this full time now for the last 2.5 years. So what I do for Alpha Shark is I call the option flow. I sit there and watch the flow throughout the day. And what I like to do is I look for when I have a technical setup or an event setup that I like, and then I'll use the options to get involved in it. I'll look at that as a second way to get involved in a stock or a position that's going on. So it's kind of funny. Annika was talking about the financials. I got into Goldman Sachs today, and even though I felt a little late, I've been watching it. It's been lagging in the bank industry. And the one thing I do like that's going on right now in the financials is Trump's about to start stumping for tax reform. And boy, do they want tax reform in the financials. And that's one of the big things. And I'm not as bullish on the FOMC next week. I don't think they're going to raise rates here. But I do think that tax reform is going to be bigger than that and that the banks can go. So I went with GS, and I went with GS because it's been range bound for most of the last 4 months. You can see it's kind of really tight in the Bollinger Bands, and I love tight setups. And today, just as across the 50-day moving average, which is this purple line right here, and I used the simple moving average for the 50-day, somebody came in and they just drilled the January 250s way up here. About $450,000 worth of them they bought, and they kept coming for them. So I went long the January 250s for a swing. They moved nicely. I got in at 330. They were at 380 a little later on in the afternoon. They pulled back just a tad, but they're okay. And so I really like this trade. It really, for me now, needs to clear the 200-day moving average, which is right here. It's this green line. You notice this little resistance line I have here. It's right here with it. It kind of stopped right on it today. So I'll be watching for this one to keep going. I may actually add to it. I'm in what I call a tier 1. So I have room to add to the trade if I want to. When I go out that long, I don't go huge in numbers. And I really kind of like this trade here, especially if it gets above the 200-day. I think this can really go. If you look at RSI, it's got plenty of room to rocket to the top if this thing gets going.
Cool. All right, Stephanie, you're up next. We're waiting on AJ. He had a little technical difficulty. So when he comes back, we'll go back to him. In the meantime, Stephanie Kammerman of the StockWhisperer.com, friend of mine. Seen her a few times in my travels, bumped into her. So, Stephanie, to you.
Thank you so much, Dave. Great to be here tonight. Just a little bit info about myself. I'm the Stock Whisperer. I've been trading since 1994. I started out in the largest prop firm in New York, Schoenfeld Securities, and my main focus is the dark pool. I run a live online trading room where I trade live all day long, but it's educational. So I'm teaching my traders how to trade while I'm actually trading, posting my entries, exits, and we do trade stocks, options, futures, Forex, and Bitcoin. And you were speaking about the financials, and I did post that we had some massive dark pool prints on StockTwits and Twitter today on Bank of America. $23.73, and you can see, Bank of America moved all the way up to 24. That's a key level to watch tomorrow. Now, yesterday, I was on the Time and Research program yesterday, which was really great, and we were asked to post one of our stock picks moving forward, and I absolutely loved AT&T. I like to combine seasonality trades with dark pool prints. I think these are the highest probability trades you could possibly take. So here's a chart of AT&T that I showed yesterday on the show. And you can see seasonality starts at the beginning of September. But guess what we had a couple of days ago? Dark pool prints. September 8th, massive prints coming into AT&T. 810,000 shares at 35.25. Another massive 700,000 share trade at 35.36. So we were bullish on AT&T, and you can see it had a nice move today. So this is what I do all day long. I trade live, reading the tape, and I love those seasonality trades.
Cool. Good stuff. All right, my name's Dave Landry, DaveLandry.com. I've been at this for a very long time, worked on both the institutional side and on the retail side. I've helped thousands of traders over the years. This is my retail site, obviously, DaveLandry.com. If anybody's interested in special offers or anything, if you go to AYT for Analyze Your Trade, I have a $100 promo code on that page, which you can get all 3 of my books for free, and check those out. I also have on this page, if you put your email in here and your name, you can start watching this course that I have. In the first 4 videos, good stuff if I say so myself. Just real briefly, just to keep things moving, I'll show you the gist of my methodology. I believe you can only predict so far out when it comes to trends. It's kind of akin to predicting the weather. If it's cloudy and thundering outside, you know it's going to rain soon. But you don't know if it's going to be raining this time next week or next year. So what I like to do mostly, I do occasionally trade emerging trends, and in IPOs there are a few breakout patterns that I like to trade. But for the most part, I trade pullbacks, and this is a good example. This is a live trade that's on right now. The CYRX, and those are the actual entries and targets up above. And I just put an initial profit target. I buy if and only if the trend shows signs of resuming. And I'm looking to capture a pop back in the direction of the trend, kind of that reversion to the mean, a fancy way of saying that. And then we're going to trail a stop higher on that. We'll take partial profits up around here, which is just barely sort of, or nearly tagged today, I should say. And then we're going to trail that stop higher and hopefully be with the stock for a long, long time. Here's an example of a longer term trade. It traded way back here. We had this little knockout bar. And if you go to my website /videos, there's a pattern on this. It's called a TKO. And if you look at those videos, you'll see it there. And that's the exact pattern we got in on. And we took partial profits right around here. And we've been trailing a stop higher ever since. And then hopefully, I know you're not supposed to use the word hope in this business, but hopefully we'll stay with that position for a long, long time. The real money is in the longer term trends. They're just too risky to trade. And unfortunately, shorter term trading is going to be a little bit more accurate, but you don't make enough, and then something bad can still happen. So if something bad does happen, or when it does happen, it's going to take you a long time to recover. So it's very important to occasionally capture these longer term home runs, and that's my goal in every trade. I'm slotted as a swing trader, and I have that in two of the titles of two of my books, but I will stick with the trade as long as it moves in my favor. Let's see if we got AJ back up yet, and I'm not seeing him. Okay, let's go back to you, Anka, and then let's just start with the top of the list. Everybody wants to know about AMZN.com. It's got more votes than anything. So let's talk a little bit about Amazon, and then who's next after that? I guess we'll go to you, Mike, while waiting on AJ.
All right. So Amazon, I like the configuration in Amazon, the fact that has put in a bottom right here into a support area at 935. So it is ready to pop for a swing trade. However, I will wait for a little bit of confirmation. So with my strategy, I'm waiting for this breakout to happen, most likely at $988. And I would like to see the price trade a little bit above this 50-period moving average. That is a good indication that the stock may be ready to reverse to the upside. So it had put a bottom here, and I could say that it has a double bottom. You could see it better here on the weekly chart. And do you guys see my charts?
Yeah.
Okay. All right, perfect. All right, so we have a double bottom here at 935 area. We have a pop up right here, and we have the first lower high that the chart has set up and resistance at $985, $986. As soon as the price is going to go a little higher, I think it has room to move. And for obviously the first target area is going to be back into the $1,000 area, and then the second target, I see it into the 115, and then after that, possible tradable void all the way into this prior high. Now, it is good to know that the tech sector tends to rally towards the end of September, and that's part of the seasonality for NASDAQ. So we should get some more price action back into these tech stocks. And I think that once we have the volume going, because we have been trading in a very, very low volume throughout the month of August, and now the volume seems to be back a little bit. Last week was just the beginning, and right after the holiday. And one of the great things about trading the fourth quarter is that it's so strong, and we have a lot of catalysts that are going to go that are going to be going on. And I think that if we see the price break above this area that I've mentioned here, it is a good possibility for it to continue higher. I don't have the confirmation for the downside yet. So far it is sandwiched in between these two moving averages. I don't like to trade anything that is captured and squeezed into both moving averages, but I feel more comfortable if this trade will definitely try to find support right here, maybe a gap up. A small gap up would help, because that can set the stage for the following day for a better entry. And we can use this gap up support here for a stop versus using a stop that is just below the 959 level. That's my take on Amazon.
Cool. All right, Mike, you're up next. Amazon.
Thanks, Dave. Annika, I'm very bullish on Amazon here, and I've been watching this now for the better part of 2 weeks in this tight range, right? We had this beautiful 3-day move here off the bottom, with the double bottom you spoke about. We took the 8 to 21 day back over the 100-day here. And right now, we're just kind of been going back and forth, waiting here, chewing up option premium. Not a surprise. We're coming into OPEX. We have OPEX this Friday for the month of September. A lot of premium being burned away there. But here's your 50-day here, right above it, and it's getting to that point to break out. And what I caught today is what has me extremely bullish. And it was right around about 320. And I posted this on my private Twitter feed to all my subscribers. They swept the November 990 calls. They started with 360 of them. There was over 1,500 at last count, and they were, I think it was almost 1,800 by the end of the day. Somebody dropped over $6 million into options on Amazon. We don't see bets like that very often. So somebody's playing for this thing to move. They're just buying a little bit of time with it. Like you, I think we clear the 50-day, and I think the 50-day right here at 990 right here is just the resistance area. We get through that. I think your next stop is 1,000. And then once you're through 1,000, I think you're going to run up to the top of this gap and see if we can't try to get to there before earnings come in. Remember, earnings aren't that far away either. So I'm thinking this thing could move a good 40 or 50 bucks before earnings.
Gotcha. Stephanie, you're next. In your dark pool analysis, do you factor in any things like those options Mike's talking about?
Yeah, actually, I noticed the options as well today, the 980s. Tons of volume came into those. But there's not too much dark pool on the stock with Amazon because it's very, very expensive. But here's my thoughts on the seasonality. As you can see, this is the start of a massive move. I completely agree with Mike. This is a massive move to the upside from the beginning of September until December. This is Amazon season. And let's just go to the weekly chart. I've drawn some trend lines. Going to make this quick. I know we only have 2 minutes with each person here. We came down to the lower trend line at 950, so there's room to go up to about 1,000 before it hits resistance. I'm going to just zoom in right here. And so there's a nice trade going up. If it can break 1,000, and of course, if it does break down below 950, then there's a trade downward, only if it breaks that lower trend line. Now, I like to combine stocks with sectors. So XRT is the retail sector. So let's just take a quick look at that chart because there was a nice breakout on this on the daily chart. And my focus right now is $41.48 on XRT. On August 8th, we had a big seller, and this is my Live Pro software again, and you can see here is a big seller back on August 8th. That's what started the big downward motion down. And that computer, if it is still selling, we will stop at 41.48. However, if we break above that area, there's a lot of room to go to the upside from 41.58 to 43, 43.50. So there's so many different ways that you can trade this.
Okay, cool. I don't have a whole lot to say. I'll keep it short and sweet on Amazon. I think the first show we talked about Amazon, it was set up as what I call the bow tie. I usually don't use any indicators whatsoever other than the occasional moving average. And once again, you can get this off of my website. But we did have this gap down after all-time highs, and that's usually a bearish situation. It bow tied down, pulled back a little bit, and then that triggered and it sold off fairly hard from that. But now I would not be taking any action on this. As a general statement, I don't trade big, thick. To show you how that stock Kenney earlier that I talked about is actually set up again for my trade for this week. And I was talking with a client earlier today, and he says, I don't even know what they do. And that's music to my ears because we are 100% technicians and we tend to trade in somewhat smaller cap issues where it's not like the big Amazons and stocks like that. Occasionally we will short something like this, but for the most part, we're going to go long, more inefficient. issues. So I think I would just leave Amazon alone for now. And if you look, it's going mostly sideways in here, even though it's kind of bouncing a little bit like you guys are pointing out. But for me, there's just there's not a whole lot of action to be taken on that one. Okay, looks like we're still waiting on AJ, so we'll just we'll go back to Anka, and the stock is BABA, B-A-B-A.
All right. All right. So I actually scanned a little bit before this session, and I ran through BABA, and I think that, in my opinion, I would not go long and I would not go short BABA. I think it has such an extensive move to the upside. Last month we had $177 for a high, and literally not unless you're buying it at the very lows here into a pullback, there's no way to leg into this trade right now. So it is really late in the game for BABA right now. You definitely need to wait for a pullback, possibly wait for another pop to the upside. Like I've mentioned before, you know, NASDAQ stocks are prone to continuing a little higher towards the end of September. So keep that in mind. Let it pop a little bit and then let it pull back. I think it's really too late in the game to even talk about BABA right now.
Okay. Looks like AJ went away, shaved, and then he had time to grow his beard back. So, AJ, just to get you up to speed, we'll go ahead and let you talk for here to get back up to speed. First of all, introduce yourself for those of us who don't know you, and AJ Brown of Trader Trader. And we two stocks we talked about were Amazon, BABA. And then to get you fully up to speed, if you do have a trade or something that's kind of representative of the type of work you do that you want to share your screen and show us, feel free to do that. So Amazon, BABA, tell us about yourself and show us a trade if you have one.
Okay, so very quickly here, let me just share my screen. The trade I wanted to show you guys, and I've got BABA up on the screen, and I agree that I would hold off on trading BABA at this moment and wait for some sort of pattern. Now here at Trading Trainer, we do all sorts of trading that's cycled around options trading. But one of my favorite things to do that's fairly easy is, you know, selling premium. So my favorite one right now, and this was actually pointed out to me in a student back in April, was Kohl's. And I've been trading diagonal spreads against Kohl's for the last 5 months. And that's where we buy a deep in the money, far out in time back month option, and then every month just sell premium against that. If we get called out, big deal. We just wait for the next cycle, wait for the next bottom, do that thing all over again. We can even do it with puts, and so that's very similar to writing a covered put, but we're doing it with a leveraged option rather than a actual shorted stock. So that's the kind of stuff we do here. It's called trading time premium. As far as Amazon goes, AMZN, Amazon, I have a couple of the people in my program that have already sold some premium against Amazon just for the upcoming month. It's about to expire this Friday. So they purchased a underlying symbol. I remember they actually purchased the underlying symbol right around this bar or this bar here, and then sold some call premium against it that is going to be expiring coming up. And so they are very happy with that, basically buying an underlying symbol and then getting an instant dividend or even a profit buffer, depending on how you look at it, by selling that premium against it.
Cool.
Yeah.
Okay, I think you're up to speed. Oh, BABA, did you cover BABA?
Yeah, I'd pass on BABA right now.
Okay, cool. Yeah, that's perfect. Yeah.
Okay, thank you so much.
Yeah, that's right. Yeah, that's right. I'm sorry. I was trying to keep up with everything. All right, you're up to speed. So, Mike, you're going to be up next, and the stock is BABA.
All right, thanks. So I have a little bit of a different view on BABA. It's come a long way, so that's the one thing you do have to be concerned about. I mean, beginning of the year, this thing was down around $90 a share or less, and it's all the way up at 175. but it's been flagging nicely up here. Nice upper level flag, held the gap, last gap up, broke the downtrend, and is now coming up off the 8-day. I would try to buy dips to the 8-day. Seems to like to bounce off of it. The only negative I caught, and there's been a lot of call buying into weekly options that expire this week, all the way up to the 177.50. So I think you can scalp this because it moves so quick on a daily basis. But the one negative I'll point out is there was a big block of December 155 calls bought today, and I saw a big, large block of stock go off. So that was stock replacement. Somebody's getting out of the way there. So I think it's scalpable, but I would not be initiating a big-time long position here on this one.
Gotcha. All right, Stephanie, any thoughts on BABA?
Actually, my chart looks so much like yours, Mike. Wow, we got those two gaps and everything there. Thought it was my chart there. All right, so we did get some prints today on BABA. We got some really big ones, actually. 400,000 share print at 175.19 and 100,000 share print at 174.10. And it is the season for retail, as I showed you with the XRT seasonality. However, where's resistance? I always want to know where the computer's selling. Where have they been selling in the past? So on August 24th, we had some selling on BABA. So I'm going to go back and show you those prints. All right, from August 24th when we topped out. And those levels to watch are 176.84 and 175.65. That's going to come first. If we can break above 175.65, we should shoot up to 176.84. You see, they play print pong, and these levels should still be in play. So that'll be what we'll be trading this week.
Cool.
Mm-hmm.
Okay, as far as Bob is concerned, I think this one was up last time, and this is why my chart is still marked up. A pattern I like is a trend knockout that I talked about earlier, and you can get a video on that for free at davelandry.com/videos for a little bit more information on that. And then also, like I said, you can grab those books for free too. And notice that it had a nice persistent trend here, knocked out, and then it took off nicely from that pattern. So that's a very tradable pattern. When you see these big knockout bars, it literally knocks people out of the trend, and a lot of shorts get sucked in when that occurs. Right now, there's nothing for me to do as a trend guy unless it was to break out to new highs and then pull back again. And I'll show you a trend trade later in the show. And while I'm here, let me just pop into the next symbol to keep it moving along, and then we'll go to AJ for GLD. GLD, as you can see, has been in a nice trend as of late. If you back the chart out, though, you can see it's kind of wide and loose and just in the middle of this range. And you can see my charts marked up from last time. I'm more excited about a big, efficient market like gold or Forex or commodities when they're coming off of major lows like we were, easy for me to say, at 2016. And when they're in the middle of a wide and loose range like this, I'm not as excited about them. For me to get excited about gold again, it would have to break out, or GLD at least, would have to break out above 130, and then I would look to play pullbacks along the way. So for GLD, wait to see if it can follow through past 130 before getting excited about it, just because it's been stuck in this wide and loose range. And AJ, let's go back to you, talk about gold.
Yeah, absolutely. I like gold a lot for a whole different reason. Again, I'm going to focus this whole call on somehow selling some sort of premium, and I like that a top is forming. So I would wait for a little bit more of the downside here, and then I would actually short GLD. And as GLD was going down, I would look for a nice period to then sell a put against that shorted stock. So I love that there is that clear level of support around 116, that clear level of resistance around 125, and we've popped above it, but it looks like that we've popped out of energy. And so as we start coming down, short the stock, and then as we start to bottom out, I'm going to be selling some October premium.
Okay. Anka, GLD.
I think that since we had this gap here that occurred on Sunday night, I don't think it is ready to go back up again. And I think it is a little overextended. It's a little tired. I think the 20 MA is calling it, and also this minor support here that is going to set up at around 124, between 123.50 and 124. And basically, to be very honest, I don't trade GLD, but I do trade gold futures. And gold futures has not been a day trade per se for a very long time. It's been, and that's because it's been mostly very, very choppy, but it makes for a really great swing trade. So in that respect, you could see that it has a much clearer chart when it comes to futures. And I think it is not ready. It is not ready yet. A pullback is imminent at this point. And I think this is today we've had a failed buy. You could see today, like right now, price activity just shot up a little bit into this cluster area at 1340, and now it's curling back down to the downside. Possibly really short-term swings, let's say a 1 to 2 day swings back into the bottom of the base of about 1327, and then 1327, possibly, let's say 1327 to 1320, possibly we may see a rotation back to the upside. But other than that, I don't see any trade as of right now. If you're looking for a long, you're very late on the game. As you can see here from this monthly chart, it is reaching this area of resistance, this 1370 area, 1360, 1370. This is a cushion of resistance here. It ran into the 89-period moving average right now. And so far, we had a small trigger on the weekly that came in yesterday, actually, that pointed a little lower right here. You could see that it's really trading into this heavy cluster, and I think it is not ready yet. Wait for a pullback. Like I've mentioned, the first rotation may happen at around 1320 and 1315. If that area is going to be breached, most possibly the next setup that may happen is the 1300, and here's where I'm looking for a rotation back to the upside into the 1350, and possibly a follow through into the 1400. I love the monthly chart pattern because it has set a bottom here last year, and actually I have been long GDX throughout this whole throughout this whole 2016. I love the fact that this year we have set here a support area higher. So this is the first indication for rotation, a change of trend back to the upside. It was a really beat up ETF and beat up commodity. But right now, this is the test right here. If it escapes this 1370, 1400 area, it's going to go back to the upside. And as you can see from the monthly chart, it has a huge tradable void. So it has a lot of room to run to the upside.
Yeah, I have to agree with you. The futures look a little bit better than the ETF for whatever reason. Mm-hmm. Mike, let's go to you next. GLD is a stock.
We're trying to keep this to 2 minutes, so I'm going to be real quick with this one. I haven't traded gold since the election. That's the last time I had gold on. I think what you saw here recently is kind of a hedge. People were worried about the debt ceiling coming up, some of the stuff going on with Trump and with Russia, and of course North Korea. And look at the RSI on this thing. It got overheated. Gold is not a stock that, unless we have extreme turmoil in the world, stays overheated. It just doesn't. So you saw the gap down when North Korea did nothing over the weekend. We're back below the 8-day. I would be not looking to do anything until we get to the 21-day, or maybe even all the way back down to the last breakout at 123.
Okay. All right, Stephanie.
Okay, so I've been long gold since the future since 11:35 during Christmas. I added on to my position at 1200. Here's a seasonality. With a great start in September, we have a pullback and then much higher highs going into February, and then a consolidation period is what this normally does. Recently, July 25th, I tweeted out the dark pool massively buying IAU, the iShares Gold Trust. This is their favorite. 15 million shares, 1202. This is huge. The last time I saw big prints like this was the end of January, beginning of February of 2016, and we all know what happened since then. So let's just take a look at the futures here. This is a weekly chart going all the way back to 2011. You can see we've broken out. 1350 is a key level that we really need for this next shorter term trade. Need to break above 13.50. Now today, we spotted a massive trade on the US dollar. Now everybody knows when the dollar goes up, gold goes down and vice versa. Sometimes they will move together, but normally it's inversive. So we had a 500,000 print on the dollar ETF UUP. This is massive. This is really large. And of course, I tweeted it out today. We were going to be bullish above 24, bearish below 23.80. This can take a day or so to really make its move. Once it does, we're going to have a massive move. So again, be open-minded to both possibilities, but we did get a large print on GLD today, 300,000 shares at $126.10, and we closed above at 126.56. So the tape never lies, and I'm going to stay on the right side of it.
Gotcha. No, good advice. Next stock up is NVDA. And for me, as a trend guy, I'll keep it short and sweet. As you can see, it's at around 169 in here, and you go back several months and it was at 169. So it has lost some momentum. Now, longer term, it's still in an uptrend, but for me to get excited, it would have to break out to new highs and then possibly pull back. But since it's been in such a long-term trend for such a long time, and it's also a very thick stock, I would probably look for something that's a little bit thinner in the semiconductor, such as Chem, and I'll show you that trade towards the end of the presentation. So the next stock up is going to be the SPY, SPY, and we're going to go to you, AJ, on that one. What's your take on the spiders?
Oh, okay. I wanted to talk about NVIDIA.
Oh, that's fine. I'm sorry. Did we skip? Okay, my bad. NVIDIA. Yeah, you're on NVIDIA.
Yeah, good. You can skip me on SPY, but I'll tell you about what my thoughts are on NVIDIA. And that is, and I'm going to deviate from what I said I would do, which was try to see if I could sell premium on every single one of my candidates. So what I'm sharing here is consolidation, right? And a lot of people trying to figure out what the heck's going on. Volume's getting little. But when I look over at the implied volatility pictures, and I'm just going to show you guys so that you can see a free chart. You can just go right to the CBOE and come up with a picture like this. You can see that the implied volatility has these nice swings up and down. And so at about 2 more weeks from now, I'm going to be expecting the implied volatility to rise, which means the demand for options rises. So what am I going to be doing as I'm waiting for this consolidation is I'm going to figure out where the placement of a nice straddle or strangle will be. I'm not going to place that until I start to see IV start to rise. Right now it's on a little bit of a dip. It's below 30% for the overall symbol. I'm going to look for it to start to rise, and that's when I'm going to place my straddle or strangle somewhere centered probably around the 167.50 mark. And I'm going to ride that IV rush, and that's how I'm going to profit off of this one. So that's a little bit different than selling premium, but that's the way I'm going to do it today.
So you're going to go long volatility?
Yes.
All right, cool. All right, let's go to you, Anka. NVDA is the symbol.
All right, so NVIDIA, I think that whomever's looking at this trade is a little late in the game. The buy was at 166 level, and this is pretty much running into target area around 170. However, on a longer time frame, on a weekly chart, we can see that we pretty much have a bull sandwich here ready to erupt back to the upside. Possibly, I ran projections on NVIDIA over the weekend, and I think it's going to run into, we have projections at 181.25 and 182, so it's well above 180. I think it's going to get there. It had a tremendous run last year. Consolidation with the breakout here. I actually took part of this breakout, I sold it after I sold it at about 155. So I'm a swing trader. I don't do any kind of options, and I had a pretty tight stop at this point. So when I look at NVIDIA, I tend to analyze all these time frames, and I look to get a tighter stop by narrowing it down to the hourly chart. And so far, the hourly chart is pretty sideways, and it's only giving me an indication that you have to wait for a breakout over 172 and wait for the price to break out and then pull back to the same area. So it requires a lot of patience, in my opinion. That's my take on NVIDIA.
All right. Mike, to you, NVIDIA.
So, this thing's had an incredible run in a little bit over a year from $20 to 170 plus. I do think this stock's a $300 stock at some time down the road in a couple years, based upon what they're doing and how they've just totally changed the game in the graphics card and in the servers. You know, if you go to the server, what do you call it? The data centers are all driving NVIDIA cards, row after row after row of them at this point. That said, we have a nice uptrend here. We violated it on Friday. It was a shakeout day. I think Dave, you pointed that out. And now we're down to the uptrend here. We're back to the downtrend. So I'm not looking to do anything unless I see some serious option flow or we break out on volume above this area, and I haven't seen either of them yet, so I have no position at the moment.
Gotcha. Stephanie?
All right, so I agree with AJ. As far as 2 weeks, the seasonal start starts in October, so we're in the beginning of, we're in the middle of September, so another 2 weeks and this thing should rock and roll. Let's just check out the weekly chart here. And there is an upper trade all the way up to 180, 200. So I agree with you, Mike. This is a great company. It has really great projected earnings growth. But look at the volume. Yeah, the volume is awful, right? We need volume. I haven't seen any prints on NVIDIA. So we could have a movement down within the next 2 weeks. If we break 160, there's a great trade down to 145, 150, and perhaps that'll be a good place to pick this up. We will see prints on it, and I will post it out there.
Okay, cool. All right, next up is the SPY. I'm going to go ahead and start on that one. As you can see, today we broke out to all-time highs. As a trend guy, I'm not going to argue with that. I have been a little concerned that we've gone sideways in here for so long, but as long as we're banging out new highs, I'm not going to fight the tape. Now, I often say, as I said earlier tonight, you can only predict the short term when it comes to markets, and somebody misconstrued that as to saying that you could always predict the short term, which you can't. When I predict the short term, usually I have some sort of setup, and then usually it's in something that's not nearly as thick as the spiders. But as far as the trend guy, just put my trend following hat on, all-time highs, don't fight the tape. As long as the market's making all-time highs, go with the tape. And then if we can continue to break out in here, maybe on a pullback, you might get an entry. But I would much rather find a smaller cap issue or something to play as opposed to a big, thick ETF like the spider, something more inefficient. AJ, let's go to you. What do you think about the spiders?
Okay, so
yeah, you skip you on that one.
No,
okay,
no. I'll give you 5 seconds. So quick, I
right.
don't particularly like ETFs as much as I like stocks, because I feel like I can figure out stocks a little bit better than I can ETFs. But on the SPY, I've got a lot of leading indicators saying that we're overextended. So I'm waiting patiently for some lagging indicators. I'm thinking some slow lagging indicators like a MACD crossing across at 0 or something like that. And again, I'm going to deviate from what I said in the beginning, which was I was going to try to sell premium against everything. On this particular one, I would trade it directionally with some sort of leveraged option strategy. I'm not sure which one, but I would wait patiently for my lagging indicators to show that I've got a top found.
Gotcha. All right. Anka, spiders?
With the SPYs, I actually look at and trade the S&P E-mini futures on a daily basis. So for me, trading the SPYs would be not for a swing trade, but most likely for a day trade. I agree with what he just said earlier, that they're overextended, and it's true, making new highs, and most definitely this is not a pick up and run type of deal. Keep in mind that next week we do have FOMC, and things can change. The overnight situation here is that we made this high into 6 o'clock, 2495.5, and we're into a pullback. As long as the 2490 is holding, maybe another buy to the upside into the 95, and most possibly a run into the 2500 is not going to be excluded. It seems that it's in a great rush to reach these psychological levels right here at the 2500.
Okay, cool. All right, Mike.
Thanks.
Spiders?
So I kind of agree the SPY's a little extended here, but the call buying has been insane the last couple of days. December 265s, 1 million plus of them bought, almost 1.2 million. Today we were seeing the March 265s, almost 600,000 of them bought. I mean, they're just sweep after sweep after sweep coming into the SPY right now, all bullish. So we haven't seen call buying like this in a while. What I will say is it is extended off the 8-day. I do like to use the 8-day moving average. You can see how it's extended here. And you can see when it gets extended like this, you tend to get some kind of pullback or sideways action, and it lets it catch up. I would look for rotation for the next couple of days. They've been strong on a little bit on energy and the banks. Maybe they go back to tech. The Qs have been lagging a little bit. Maybe we see some beta names in the next couple of days. I would not initiate here. I'd wait for it to reconnect with the 8-day.
Okay, cool. All right, Stephanie, you're up next.
Yeah, I agree with Mike. There's definitely been massive call buying. You know, they're not going to take the market down till everybody's in the boat, right? So seasonality, come on, when everybody's bullish, when what's his name, Mr. Doom and Gloom comes on TV and he says, Mark Faber, right? I'm bullish, that's the top. But seasonality, it looks like the middle of September, just over the past 20 years has been peaking. Now, last year, the dark pool started selling at the end of August, but we have not seen that. Check out the prints that we had today. I haven't seen any selling yet. Can you guys see my screen? Oh, yep. Okay. So today we had these prints. Check these out. These are all 501,000 shares, $249.19. And notice that the share size all starts with 501,000 shares. This is the dark pool signature. These are late dark pool buy prints from yesterday, because you can see the low of the day was 249.42. So I've called the last 10 corrections on social media before they've happened, because they've all had the same dark pool pattern. They're late dark pool sell prints. So these are late buy prints. They're late sell prints from the day before, and we usually get 10 to 20 million shares of these, and we get them 3 days in a row across the entire market, the SPY, the Russell, and the Q. So when this happens, I'm going to be tweeting like a maniac, but it has not happened yet. So you can follow me on Stock Twits. My handle is Volume Princess. I'm sorry, _stock_whisperer. On Twitter, I'm Volume Princess. If anybody has any questions, you can email me at stephanie@thestockwhisperer.com.
Okay, cool. As far as Apple is concerned, it's nothing that I would trade at this juncture. You can see it's gone mostly sideways in here for quite a while. So I would leave that one alone. So let me just show you real quick so we could make sure we get everybody in and keep the show within a reasonable time. Let me show you the trade of the week that's set up now. We are actually long this right now in my trading service. I have a daily actionable service. So this is one we talked about earlier with the TKO. And again, everything I do is fully disclosed. And I'll just show you real quick. If you go to my website under videos, there's a video on a TKO pattern where I explain the psychology behind it. Everything is conceptually correct and has a psychological backing. You can see this stock's been in a really good trend, and then it's pulled back here. So we're looking for a pop back up to new highs, and a little bit beyond those new highs, we're looking to take partial profits again, and then you bump your stop at the break even should you be blessed with the profits. So a little bit above 22, maybe 22.5 would be a good entry on that. Stop around 18 or so, or maybe a little bit looser than that. Just give it a little bit wiggle room, maybe about down to 17, just in case it's not finished correcting after it triggers. And again, I'll wrap the show up in a minute, and I'll show you some more links. But as far as Apple, there's nothing to do there. Let's see. Did AJ? Did you get Apple? Yeah. No, you haven't done Apple.
I haven't done Apple yet, but I don't think I don't think I'd be trading Apple at this time either. Let me just pull that up. Again, what we're focusing on right now here at most of Trading Trainers is we're finding things that have just been stuck sideways for years, and we're just selling them reliably. Things that are going under the radar, things that are not hot, rather they're just producing income for us. And we're doing that mainly with diagonal debit spreads, whether they be call or to the put side, depending on where we want to protect ourselves for the first cycle. And I already featured my Coles trade, so I don't want to take any more time. I know we're on a time schedule, so I'll let the next person go.
Okay, fantastic. Anka, Apple?
All right, just a second. All right, so with Apple, today we had the big announcement in Apple. We got a flurry, and as always, Apple always pulls back into the event, and then it takes off again, and then it sells off again. So it's right now retesting its support area at 158, and this is the 1 hour chart right here. We've managed to break this cluster to the upside on the actually almost the last day of August. On the 30th, we managed to make a new high, and then the pullback. Well, this pullback isn't exactly what I'm looking for, and the fact that the price is still located really close to this 20-period moving average, it means to me that I'm relatively neutral on it, and I don't think it is ready to move to the upside or the downside just yet. If we trade below the 158 level, I think we're going to pull back into the 156, most possibly even steeper into the 153. We'll see how this is going to play out. And like I've mentioned, I'm looking for this seasonality for NASDAQ to continue through the month of September into the end of September. So we're going to see what's going to happen with Apple. But so far, I'm neutral on it.
Okay, cool. Mike, you're up next.
You know, I don't trade binary events, and I got to tell you, I was a little disappointed with them today. And one more thing, I thought we were going to get a new product. I don't consider a new iPhone a new product. You know, I consider it the same. So I think the market reacted to that. Look at the volume. I mean, this looked like an earnings day. Look at the massive volume on this thing. You know, tomorrow maybe we get a bunch of upgrades from some analysts or some firms that want to get out or sell here, but I would be real careful trading at this point unless you saw a big volume on a big move and option flow come in. So I'm going to keep it simple like that. I don't like it here. I don't like the way it's set up.
All right. I hear you. Stephanie?
Yeah, absolutely. So my traders killed it today on the short side, trading Apple because of this print right here for 224,000, 161.33. Leslie killed it. Ron killed it. He had puts. Leslie did straight out stock. And, you know, when you have an event like that and you go from positive to negative, that is the best time to go short on the stock. So I'm going to use that as a level, but I love Apple because we get prints on it every single day. And so that's really the only way I know how to trade. We'll see what happens tomorrow. Mm-hmm.
Very cool.
Okay. All right. Well, let's AJ, let's go back to you. Do you have any? I think that's about all we're going to be able to squeeze in tonight. Do you have any closing thoughts or a trade you want to throw out for us?
No, I just wanted to let people know that I'm really impressed with some white papers I wrote over the last 3 months. And so I wanted to give people the opportunity to go grab them. So on my screen is a little website, 6%protocol.tradingtrainer.com. And actually last week we did a good webinar. So if you want to add webinar -replay to the end of that, you got it. And anybody can reach me at aj@tradingtrainer.com if they want to talk about selling some premium.
Okay, cool. All right, Anka, any closing thoughts?
Yes, and thanks so much for having me here tonight. And if you guys are interested in future signal service, this is a service that we run for day traders, for futures day traders, and we are up close to 200% on the year. And this is not options, but this is day trading, live stats and everything you can find at tradeoutloud.com. Look for the future signal tab and tap right there so you can have access to it.
Okay. Mike, closing thoughts?
Yeah, I want to leave you guys with one trade. By the way, if you want to get a hold of me, @OptionsMike is my Twitter handle. I'll tell you all about my services there and how I trade and how you can follow along with me. But I did sell my calls today. I had the October 17 calls. I went in the money, sold those today because it got extended here. But I think there's a good chance Twitter tries to keep filling this gap ahead of earnings. So if you get any kind of dip, I'd look to go long on it. Thanks for having me as well.
Glad to have you here. Stephanie?
Hey there, thanks for having me as well. So yeah, every day I trade live. So come on to my online trading room, the Java Pit. You can log in on my website, do a trial, 30 days, $9.95. That's it for a trial. And I'll teach you how to trade around the dark pool live every single day.
Cool.
Very, very cool.
Cool. Again, Dave Landry, DaveLandry.com. If you go to DaveLandry.com/AYT, you can access the videos I mentioned earlier for free. Just put your information in here. And also, if you scroll down, there's a promo code on this page, and you can reuse it. You can get all 3 of my books for free and check them out. And there's some recent content towards the bottom if you want to get a feel for the type of work I do. I do a weekly webinar every Thursday, usually at 11 Eastern Daylight, at least it's daylight now, time. And we have a lot of fun in these webinars. We don't take ourselves too seriously. And I usually lecture for a while, and then it's kind of a venue similar to what we're doing here, except we're able to get through a few more stocks just because we don't have 5 other people in here, which this is kind of fun too, obviously. But anyway, I do this in the second half of the webinar. So if you have any stocks you want to talk about, anything you talked about tonight or whenever, feel free to bring them up in the webinar. I can be reached at DaveLandry.com and answer all of my emails. So I want to obviously thank all you guys for being here. I'll let David close down the show. And obviously I want to thank David Kosmitter for having me tonight and Analyze Your Trade for having me back once again. Thank you so much.
All right. Thanks, everyone. Great show. Just want to remind everyone watching, be sure to hit the YouTube subscribe button to get updates on future shows. Also, you can always go to TimingResearch.com/live to get the links, the live presentation links for each episode of both shows. Be sure to join us next week for Crowd Forecast News, which will be usual time on Monday at 1 p.m. Eastern Time, and the next episode of this show, Analyze Your Trade, on Tuesday at 9 p.m. Eastern Time. For guests next week, AJ Brown will be back, and also between the 2 shows, we'll have Christian Fromhertz, Simon Klein, Matt Buckley, Neil Batho, John Netto, Sam Borgi, and Dean Jenkins. So just want to thank all my guests again for tonight. Mike Bassani of AlphaShark.com. So this was his first episode or first appearance on either of the shows. So I want to thank him for being on tonight, as well as Stephanie Kammerman of TheStockWhisperer.com, Anka Metcalf of TradeOutLoud.com, AJ Brown of TradingTrainer.com, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you.
Thank you.
Thank you.
Thank you.